we have many individuals in the alternative media that are saying that we're going to get hyperinflation within the next few years because of all this money printing. And we see that Janet Yellen, she's a money printing junkie, and she's going to come in. She's going to take over the role of Bernanke. And since she's going to take over the role of Bernanke, guess what? That's going to lead to the next bubble. I've even said that, hey, this could be potentially hyperinflation. Many other pundits have agreed. But the thing is that this hyperinflation that everyone's talking about, and even what I've been talking about, in my opinion, if we see a black swan event, such as in China, I'm going to show you why my mind may be slowly but steadily changing. Within the next few years, I see this either as a deflationary head fake, or B, a secular bear market that is continuing on, which will lead to a stagflationary cycle, or it's going to end in a stagflationary cycle. So we're going to see not the hyperinflation, but maybe something like the 1970s, along the line like that. And we know what happened in 79 or 1980. And my mind is slowly but steadily changing based on what I'm seeing in China. And the thing is, we have many guys in the alternative media saying hyperinflation, this and that, and we've seen this time in and time out, such as John Williams. Don't get me wrong, I respect John Williams for actually coming out with his publication saying that we have much higher inflation than what the US government's saying. I totally agree with him. I think that the government numbers are bogus. I mean, at least MIT's Billion Price Index, that at least is much better than the CPI. But Williams, I mean, I've listened to his interviews like in 2012 saying that hyperinflation is going to happen next year or something like that. And obviously it didn't happen. I mean, I think he told that to the guy named Jim Paplava. I was listening to some interview on YouTube. Must have been a year and a half ago. I mean, still I respect John Williams because he is against big government. I know that. I think he's a Ron Paul guy. So don't get me wrong. I'm not blasting John Williams one bit at all. But that being said, if you have all this money printing, yes, this is going to lead to problems down the road and dislocations. I've stated this as well. But they could potentially, the central planners, kick the can down the road. And we could take a look at what's going on in China and why my mind may be slowly but steadily changing. But let's take a look at what's going on again. Okay, right over here is the 7-day repo market in China. And what we saw in June, this actually not worried me, but when I saw these rates, right, these were like roughly slightly under 400 basis points, and when they shot up to somewhere around 1100 basis points, around there, red flag there. But that issue, in my opinion, would die down, just like what we saw in 2007, 2008, where the Fed just came in, poured money to try to alleviate the problems in the credit markets, right? The interbanking lending market, right? That's the way to say it. But look at this spike again as of, I don't know, a few days ago. Or I think it must have been like, yeah, it must have been a few days ago. So over here, it was like 600 basis points. You saw a spike from 400 basis points to 600 basis points over here. And then earlier in the year, or it must have been late December, you saw the interbanking lending markets go from a little over 400 basis points to somewhere around 900 basis points, or a little under that. So what does this signal? It signals that there is stress in the credit markets when you see spikes like this. I mean, the average, before it spiked up, it was like somewhere around 300 basis points, right? And when you see a move like this, or if you see a move in December, that sparks a red flag in my eyes. And we could just look at what the credit markets entail. Let's just look at one definition I want to share with you. Okay, I'm at LouRockwell.com right now, and I want to look at this one concept laid out in this article labeled Government Bank Runs by Gary North. So let's go down to where he talks about fractional reserve lending. Okay? Let's just do this. Zoom in. The big money for large banks is not gained from depositors who walk in the door. It is gained from pools of investment money that are not covered by any form of insurance. This is short money, usually tied up for no more than a few days. He's talking about the American banking system, by the way, but it could apply to the system in general, all around the world. This is the heart of bank profits. The banks are borrowed short, days, not months, and lent long, years, not months. These are profitable arrangements because, except at the start of traditional recessions, long-term rates are above short-term rates, a positive yield curve. Borrow low, lend high is the law, and profits for fractional reserve banking. So let's get this right. The banks are borrowed short, and they lend long. So, long story short, you take liquid assets, right? And you lend them out long term in illiquid assets, probably more than 5 to 10 years. And if the economy is booming, that's great. What happens when there are individuals that start to lose money, right? What if companies go under? What's that going to do? It's going to create disruptions in the system if you see a bunch of these companies go under, because then the banks will have to come up with the money then, because they're not paid the interest and the principal anymore from bankrupt companies. And then when people find out that the banks don't have the adequate capital, then there are problems out there. And let's go back to China now. Okay, so this is the 7-day repo market, the interbanking market, right? So what do firms do? They take liquid money, right? And they lend in long-term illiquid assets. So if the rates are low, they take this money and invest in illiquid assets. It's fine as the economy is booming, like I mentioned. But what happens when these rates go high, right? That means that there's stress in the system. And they throw cash at it to try to alleviate this problem. But it's not going to do a darn thing in the long run. It's only a short-term fix, because what happens is you cannot completely get rid of the situation because there are other firms that are experiencing this problem as well. And simply just pouring money into the system will not work. And this was actually one of the mistakes of Bernanke. I don't agree with central planning, but if he wanted to fix the problem in 2007, 2008, what he should have done from a central planning perspective, he should have recapitalized the banks. And if the Chinese don't do that, they're going to have problems, in my opinion. And this could be, in one of my scenarios, a deflationary head fake. Okay, I've seen this off of Zero Hedge. I know some people don't like it, but it had an interesting article today. And you see it talk about there is a default going on in China at the end of the month. And I've discussed this in one of my podcasts. But if you want to look at one of this report that came out today, as China's CNR reports, depositors in some of, I can't pronounce this, Yancheng City's largest farmers, cooperative mutual fund society banks have been unable to withdraw hundreds of millions in deposits in the last few weeks. Everyone wants to borrow and no one wants to leave, warned one salesman. And loan repayments are difficult to recover. There's no money and the doors are locked. Assuming that this story is true, what else is going on in China? I mean, like I told you, with those repo rates going up, and also with the 10-year going back to 3%, and you see this over-leveraged market, there seems to be problems when SHTF, or when you see it closer to the end of a bull market, 4 or 5 years into it, you start to see problems because everyone's over-leveraged. And if China is facing difficulties, as evidenced by this repo market or the credit spreads, then guess what? It's in my opinion that China cannot be the world's reserve currency, that they probably will not be dumping bonds as everybody's saying. Because if China has to clean up their own mess, right, and they don't have that much debt right now, would they start dumping treasuries at that point and they could face retaliation by America? I mean, America could retaliate. If China, suppose they dump treasury bonds, as everybody's saying, within the next few years. I'm not talking about within the next maybe 10, 15, 20 years. I do believe, as Peter Schiff is talking about, don't get me wrong, and Ron Paul is talking about, nasty inflation. I agree with their thesis. I'm not quite sure now with the timing of when this is going to all unfold. I still believe in the Austrian school. I do believe that money printing creates dislocations within the economy. I've stated that. Now, when is this all going to unfold now? What do you guys think about this? Because if China has a bubble, would they be throwing or would they be dumping all those dollars into the market? Some people may argue, hey, they could, because guess what? They're going to have to take care of their own, and they're going to have to dump those bonds in order to take care of themselves. But then at the same time, would they be able to gain access to our markets then, right? Because we buy a lot of their cheap stuff. So that's something to think of. I mean, ultimately, they should be dumping our bonds. I think that would be the best long-term solution for America. But would they do that actually? Would that be in the Chinese central planning, how should I say it? Would that be in their own favor? What do you guys think? What do you guys think about stress going on in their banking system? How would it affect the American bond market? Everyone's talking about a bond market. I've been talking about it as well. But the more that I think about it, the more that I see the stories coming out in China, if China goes down, we go down. But it could actually be a deflationary head fake. Or a second option, like I mentioned, we could be in a secular bear market, which ends in a stagflationary tail like the 1970s, late 1970s, early 1980s. Alright guys, thanks for listening. Let me know your thoughts. Goodbye.